Greetings of the day, friends. I'm Onkar Singh and welcome to our channel Mindscraft. Friends, today we are going to discuss what are goods. Goods, this is a very common term that is used in accounting. And students very often they get confused between goods and assets. So today we are going to discuss what are goods, what is the difference between purchasing assets and purchasing goods. So let's start. In business, in daily routine, purchases of goods keep on happening. Purchase of raw materials keeps on happening. Purchase of semi-finished goods keep on happening. Like being a manufacturer, you of course you would be needing raw materials, semi-finished goods or semi-processed goods for further processing to convert into finished goods so that you can sell to the customers. Or being a trader, you need finished goods, you need stock and trade regularly for selling purposes. So you need to purchase this finished goods and stock and trade, because trade means buying and selling of goods. So you need your stock, your commodities in which you're dealing in. So this raw materials, semi-finished goods needed by the manufacturer very often, or the trader who is asking for finished goods or stock and trade very often for selling it to the customers. These are very often, these are very frequent activities that keeps on happening. Now the items, commodities in which you are dealing in which your business deals in, is called goods. These are called goods. So items, commodities in which the business deals in, or in other words, if I say the purchases of such items are done frequently in order to process them or to sell them to the customer. If you are a manufacturer, you would be needing raw materials to process them, to convert into finished goods, and then to sell to the customers. Or being a trader, you're buying goods, you're buying such items, commodities to sell to the customers. So whatever the items or commodities that you're dealing in is goods. Now goods involves raw materials, semi-finished goods, finished goods, stock and trade. So now I told you, like if you're a manufacturer, in case of manufacturing concern, goods would be referring to, or goods means acquisition of raw materials for the purpose of conversion into finished goods and then selling those goods to the customer, basically to the wholesaler or the retailers or directly to the customer. But if in case you're a trader, in case of a trading concern, good means those items or those commodities which are purchased, why it are purchased? For selling it further to the customers in order to gain, in order to earn economic profits. Now example, if you're a cloth merchant, you would be dealing in cloth, right? So cloth for you is goods. So if a cloth merchant is purchasing cloth for sale, clothes for purchase is goods. Then if you're a furniture merchant, you would be needing a log of woods, because you're going to convert it, you're going to make furniture, table, chair, bed, dining table, many things, wooden stuffs out of it, so that it can be used as a furniture and you can sell it to the customers. Or you can also buy a ready-made furniture from some manufacturer, okay, who is making furniture. So basically, if a furniture merchant is purchasing log of woods for making tables, beds, chairs, or for buying tables, chairs, for selling it to the customers, such items are called goods. Then if you are a stationary trader, if you're dealing in, of course you would be dealing in stationery like pen, pencil, eraser, sharpener, ruler, staple pens, many stationery products are there, sketch pens. So these items, pencil, sharpener, eraser, notebooks, ruler, these all items would be goods for you. If you're running a restaurant owner, of course you would be needing vegetables, cottage cheese, and whatever the relevant stuffs you would be needing to make your dishes, to prepare your dishes so that you can serve to your customers. These vegetables, these eateries, these fruits or cottage cheese, whatever you are buying on a regular basis in order to prepare dishes to serve your customers, these are nothing but these are goods for you because you're dealing into it on a regular basis. So from these examples we can understand that goods are bought frequently, and they are bought frequently in order to sell it to the customers. Buying and selling are frequent. Purchase and sales are frequent. The thing is, like, these are goods. Goods basically are bought frequently in order to sell it. So production keeps on happening. That is why you need raw materials. That's why goods are used or they are purchased regularly. Now we will be understanding how goods are different from assets. Though unsold goods are treated as asset because they have realizable value, but there is difference. Like when you purchase goods, you purchase it for selling purpose, and these are frequent. So this is a revenue expenditure because this expenditure you are incurring in order to earn a revenue. But wherein when you purchase assets, these purchase of assets are not regular in nature. So this is capital expenditure because purchasing asset is going to increase your productive capacity. You can earn more revenue. This is adding value to the business. You can sell it whenever you feel that yes, it is obsolete, not in the working condition. That time you can sell it. So purchasing of assets and purchasing of goods are two different things. Purchase of goods are recurring and purchase of asset are non-recurring. You will not purchase asset every now and then, but goods you need to purchase on a regular basis on the frequency is more. And when we discuss about accounting treatment, if you're purchasing goods, purchases account would be used. But when you're purchasing asset, then that particular asset, whichever you have purchased, that would be used, that would be debited. Similarly, when you're selling goods, sales account would be credited, but when you're selling asset, asset account would be credited. Now, simple, you just need to understand that how purchase of asset and purchase of asset goods are differing. Like, these are different from each other. Now, if a cloth merchant, if you're purchasing cloth are goods for you. But if you're purchasing furniture is asset for you. Cloth is goods for you, but furniture is asset for you. Stationery merchant, if he is purchasing stationery is goods for him. But if he's purchasing computer, printer or air conditioner, such office equipment would be asset for him. Furniture merchant, if he's purchasing furniture, of course that furniture would be goods for him because he's dealing into. But if he's purchasing air conditioner, that would be asset for him. Furniture would be goods for him, but air conditioner would be asset for him. And similarly, if a restaurant owner is purchasing vegetables or cottage cheese, these are goods for him. But if he is purchasing furniture or air conditioner, then that would be asset for him. So today we have discussed that what are goods, how purchase of goods are different from purchase of assets. Then we have discussed that what is accounting treatment when we purchase goods and when we purchase assets. So this were the point that we have discussed today. So I hope you have liked the video. Thanks for watching the video. And if you have got any queries, any questions in your mind, if you've not understood or you want to give some suggestion, you can put in this comment section. We are going to post our next video on purchases and sales very soon. So if you have not subscribed to the channel, you can subscribe to the channel at the earliest. You can press the bell icon to stay connected, stay updated. Thank you very much.